Hello and welcome to this Forex Preview at XM.com. I'm Maria Pashardis, and joining me is Senior Investment Analyst Rafi Boyajan. We'll be discussing Australian jobs data and the outlook for the Aussie. So Rafi, Australia's latest employment numbers are due out tomorrow. Now, recent data has pointed to a bit of a slowdown in the labor market. What can we expect from the September figures?
So there has been a slight moderation in jobs growth in Australia, and although in August we did see a very solid rise in employment that was mainly led by part-time positions, and we did see a big drop in full-time jobs. So in September we are expecting the overall employment to rise at a much slower pace, and the unemployment rate to stay unchanged at 5.3%, and so that's unlikely to satisfy the Reserve Bank of Australia, which wants to see a much tighter labor market before it can be confident that wage growth will pick up. So if the unemployment rate stays at 5.3%, that would point to plenty of slack there in the labor market.
I see. Now, markets are expecting at least one more rate cut by the Reserve Bank of Australia in the coming months. How do you think the data will influence monetary policy?
Well, the RBA is keeping a very close eye on the labor market. It's one of the key factors it watches for setting monetary policy. And we did though see a bit of a drop in rate cut odds in the markets by December, and that's mainly on the back of the positive developments we saw on the trade front, because the Australian economy is heavily exposed to the ongoing trade war between the US and China. So any progress in any easing in those trade tensions would also lift the Australian outlook as well. So if we were to see a disappointing number for employment on Thursday, then we could see those odds start to rise again as markets, as investors would price in a much stronger chance of a rate cut by December. But even if we were to see a strong set of figures coming out of Australia, a rate cut would remain firmly on the table because of the current low rate of inflation in Australia.
Right. And finally, how will all this affect the Aussie?
Well, the Australian dollar has been struggling to gain traction this week, even though we did see a pretty decent rebound in risk sentiment in the broader markets, and that suggests that investors still expect the RBA to cut rates, if not by year end, then at some point in 2020, given the fact that the inflation has been running below the RBA's target for some time now.
Rafi, thanks so much for joining me, and thanks for watching at XM.com.